What's up, my people? It's your boy Ola Tony here, and I'm back in with another banger video. In today's video, I'm going to show you guys how to trade liquidity sweep and divergence. If you want to be profitable with this strategy, stay tuned and let's get started. Welcome guys. In today's video, we're going to talk about liquidity sweep and divergence. So basically what we are doing is that we're just taking advantage of a liquidity sweep, like when there's liquidity sweep, and we can know that that's a legit and a real liquidity sweep whenever we spot a divergence. And I hope you guys know divergence. I've created a lot of videos about divergence, but if you don't know, let me just do a quick explanation about both of them. So I'm on my chart here. I'm on Euro USD on the 15-minute time frame, and mind you guys, this strategy works on higher time frame, so you can use the 15-minute, 1 hour, 2 hours, 4 hours, but the minimum time frame you can go for is 15 minutes. So let's look for example. So first we need to add our indicator. So for divergence, you can use the you can use the RSI. So this in this case we will use the RSI. So I'll add the RSI, that's relative strength index, RSI. So this is it, relative strength index, RSI. So that's it. So here's the indicator. So you just go to your settings. If you are using trading view, then do away with this RSI base in MA, you remove it and you have this. So this is what we are going to work with. So first, what is a liquidity sweep? I won't go into details. I'll just tell you guys what a liquidity sweep means. For example, liquidity sweep happens in when areas where there are stop losses. For example, double top, triple tops, where you know everybody psychologically will put their stop loss. For example, a lot of people put their stop loss here, you understand? So this was a liquidity sweep. And to know a liquidity sweep happen is that it happens when there's a wick. You see a wick, you see that this is a kind of like a double top, and it just wicked on that line. For example, what happened is that it just took out those guys that put their stop loss and it went up inside. So that's what happened. So this is a very good example of what I'm trying to explain. You can see liquidity was taken here, and this is divergence. You understand? This is divergence. You can see, we all know a divergence. Divergence means when the price and the indicator is giving us opposite information about the market. That's what they call a divergence. For example, this is telling us that this one is higher than this, but this is telling us here on an indicator that this is higher than this. You can see that there's a divergence. They are different things, you get. So let me draw it for you guys to see. So this is it. This is called a divergence. So you can see that this is a valid divergence. So you can use this to spot liquidity, because there are some cases whereas you might feel liquidity was taken, but liquidity was never taken. You understand? I should give you an example. I'm even looking at one here. For example, if you look at this example here, you can see this one. This is what the market is showing us here, and this is what our indicator is showing us here. So in this scenario, liquidity was never taken because we have same thing, but here we have opposite thing. And you can see here, liquidity most times are taken by a wick, like a candle rejection, like just something very quick. You understand? Because when the institution want to load a lot of orders, they need liquidity. You understand? So that's why they want to take a lot of people out. You understand? So they'll force you to buy at that level, then they can now load up and move. So that's why it happened. So this one wasn't a liquidity, because you can see that they are the same thing, but this was a valid liquidity. So I hope you guys understand what I'm talking about with this simple explanation. So let's talk about entries. Let me look for more examples. There are a lot of examples we can just. So liquidity happened here. You can see this low, and it wicked above it before it went up. You can see it wicked above it. Let me zoom it for us to see. You can see this low here. What happened? A lot of stop losses were resting here. It wicked above it. Then what happened? It went up. And do we have a divergence here? So I've already spotted the divergence. That's why I know it's a liquidity. So guys, always check. I've already saw that, and I knew it's a liquidity. You understand? So this is it. So to enter your trade, I would advise you guys to just go for your 1 to 2. You understand? Because it depends on market structure. You understand? So now we don't know the trend of the market or the structure. So, but in worst case scenario, you must have your 1 to 2. You must have your 1 to 2, and this strategy is 90% accurate, guys. You can see 1 to 2. You got our 1 to 2 very smooth. You understand? So we can look for more and more examples. You understand? You can look for more and more examples. There are a lot of them. Let's just keep checking. Okay, see, nothing happened here. All right. Oh, very good. This is a good example. You can see this. You can see this low here. Liquidity was taken because there are a lot of stop losses here, because a lot of people have gotten here. Because I think in situation like this, people have seen that the market structure is a bullish trend. So you can see it went bullish from here. So you understand? But now, since people saw that as a bullish trend, so a lot of people will have, when they saw this, because this is a change of character, when they saw this, and I think there was a fair value gap here, so a lot of smart money traders will have gotten in here. But what happened? They took them out. You understand? So this liquidity, as I told you guys, you can see the wick. So what happened? Let's check our RSI to see maybe a divergence happened there. Let's check. So a divergence happened, yes or no? It happened. You can see, guys, it happened. So what do we do? Just go for a 1 to 2. 1 to 2 weeks reward. 1 to 2 weeks reward. So 1 to 2 weeks reward, and 1 to 2 and start. So you must wait for the candle to close, then you go for your 1 to 2. You see, very easy. So guys, it's a wrap for today, but I'm still going to do another video for us, because this is just an introduction to this strategy. I'm going to do a comprehensive video where we will understand market structure, then we'll now enter the trade, because that gives us more risk to reward and more clarity and validity. You understand? So let's just take one more example, and that's all for today. So if you really like what I'm doing, like and subscribe, because I come up with new creative strategies to defeat the market. You understand? Majorly a price action trader, I understand, but I know much about SMC and ICT and the rest. You understand? So my goal is just for us to make profit here, because I'm building a community of traders for us to be profitable. You get? So if you want to be part of this and you really like what I do, please support me, subscribe, and let's roll. So I'm looking for more opportunities. So you see what happened here. You can see what happened here. This a low. It was taken out. You can see. So what do? You enter your long. But I've seen it already, guys. Please check. Maybe if there's a divergence or call, because I showed you an example which one that wasn't divergent, because there are sometimes it might look like a divergence or call, but it never. Always check your RSI before you go into the trade. So what happened here? We enter our long here and put your stop loss here. You see, it never took us out. It never took us out. Then what I told you, 1 to 2. This strategy is very good, guys. You can use to pass your prop firm or grow your small account, big account, anything. You can see profit. So that's it, guys. That's a wrap for me, and see you guys next time.